customers saving more than before on EMIs? Last year, base rate was in the range of 10 to 10.25% for all banks. After the series of rate cuts this year, base rate for all banks is less than 10%. SBI, ICICI and HDFC base rate is between 9.3 and 9.35%. Going by this, home loan rates for customers have been reduced by 0.75 basis points. Compared to last year, borrowers are saving around rupees 2,000 more every month on the loan amount of rupees 50 lakh. The point of concern is banks have not reduced the rates by same magnitude as RBI. This year, RBI has cut repo rate by 125 basis points. Banks have cut interest rates by just up to 50 to 60 basis points and can potentially reduce them further by 60 to 65 basis points. If banks cut interest rates like the RBI, how much would you have benefited from a 30 lakh rupees loan spread over 20 years? Currently, on a 30 lakh rupees loan for 20 years, SBI is offering an interest rate of 9.5%. This means an EMI of rupees 27,964. If SBI cuts rates further by even 0.5%, EMI would then be rupees 26,992, saving you rupees 972 per month. Customers as well as corporate world relying on bank rates were hoping for lower interest rates. The actual rate cut has left them disappointed. Customers are also wondering why banks like SBI is offering home loans at 9.55% when the base rate is 9.3%, and why ICICI is offering the same for 9.65% when they have reduced base rate to 9.35%. Reason is home loans by banks are linked to the base rates. The home loan rate is usually base rate plus a margin. Banks arrive at the base rate after looking at their cost of funds and other factors. That is why it is different for each bank. The premium is around 20 to 30 basis points higher than the base rate. But why are the banks being so tight-fisted with their interest rates?
That whenever the repo rate has been increased, banks don't wait, they immediately pass on the repo rate increase into their lending rates. Now, if one goes and talks to the bank now, then the usual argument put by the banks is that there is a issue of asset and liability mismatch, in the sense that most of our assets have been borrowed at an X cost, and even though the repo rate has come down, till the time the cost of my borrowing doesn't come down, I am not in a position to pass on the entire benefit to the customer.
Irrespective of all the obligations banks have to fulfill, a recent research report by CRISIL has suggested there might be a 25 to 30 basis points cut in the interest rates in the coming months. The RBI reduced the risk weight on loan up to 75 lakhs. This move may prompt banks to bring interest rates down. We can only hope that there is more opportunity for further interest rate cuts in the near future. This way, home buyers can take full advantage of the rate cut.
All right, to discuss more on home loan rates and what you should be doing right now, joining me is Abhishek Dwivedi, who is the Vice President at bankbazaar.com. Thanks very much, Abhishek, for joining us here on Money's Best Friend. The 50 basis point cut came as quite a surprise, isn't it? And most consumers, and especially in the media, it was made out to be a very, very big event. But consumers have since realized that it really hasn't meant that much of a difference. Banks have not necessarily passed on the series of rate cuts that we've seen over the past 1 year from the RBI. The RBI wants banks to cut rates. Can you explain what's really going on? What is the kind of benefit actually that consumers have got?
Rightly said, Vivek. So like you're saying, at this point of time, the RBI governor really surprised all of us by doing a cut more than what people were expecting. So people were expecting a 25 basis point cut, while we got a 50 basis point cut. Now this debate has always been going on, saying that whenever RBI cuts the rate, the entire benefit should go to the end consumers, and that's what our RBI governor is also nudging the banks and the financial institution towards. Now, if we go into the mechanics of why this does not happen, now before that I'll just come here and say that in this case, if you see the 50 basis point cut which RBI did on the repo rate, the actual benefit which got passed was somewhere around 20 basis point to 25 to 30 basis point, not more than that. That's what we have seen. Now, to going in dynamics of that, typically what happens that every bank has a cost of fund. Now, in that cost of fund, one part is that where they borrow money from RBI, and that's where the repo rate concept comes in term. So when a bank borrows money from RBI, the interest charge is the repo rate, which is 7.5 at this point of time. Now, ideally, when the interest rate is being cut, right, the bank should ideally cut the rate, and that's what people expect. Now, the question is how much exposure the bank has for the funds it is borrowing from the RBI. For example, let's say there is a bank A. If the total funds which they are borrowing from RBI is very less compared to total fund what they have, then the impact of the RBI cut will be much more lesser on them. So I think the argument which is being put by the banks that though RBI is cutting the repo rate, their entire cost of fund is not going by the same margin. So whenever they cut the rate, they say that, hey, I have taken consideration of my entire cost of fund, and based on that, I have done a cut which is the best possible in our interest.
In some of the cases, Abhishek, we've seen while banks have lowered their rates, they also seem to have made a distinction between old borrowers and the new borrowers. Take us through that. And is that a right thing to do? Because when you do have a rate cut, you would say that logic demands it should be passed on to all borrowers. But that doesn't really seem to be the case.
Correct. So Vivek, I'll take this question in two parts. The first part is that whenever the rate cut happens, ideally the people who are in floating rate should be impacted. Whenever a consumer takes a home loan, typically they take either a fixed rate or a floating rate. Now in India at this point of time, the 95% people who take are the floating rate, and that's what we advise as well. So ideally for those entire chunk of people, if the cost of fund is going down, ideally the rate should go down there as well. Now, for banks, it's a business. For any NBFC, it's a business. So essentially, the way they say that, they try to pass on the maximum benefit to the new borrowers, so that they can get more market share, so that they can get more business at their end. While if they reduce the cost proactively for all the existing lenders, this will actually significantly cut down in their profits. So very few banks will do proactively and then pass on exactly the same rate. However, this does not say that the consumers on their own cannot go to the bank or an NBFC and demand the same rate cut. So this is in complete benefit of the customer, that whenever a rate cut happens for a new customer, and even if the bank is not doing it for the existing customer, you can please go ahead, ask your bank that, hey, I want to avail the same rate as well. And if that doesn't happen, again banks have the consumers have another benefit for them, that they can transfer their loan from bank A to bank B, where they can avail actually a much lower interest rate.
So what you're saying is, Abhishek, that the system currently is so unfair to an existing borrower that if I want to get the benefit of a lower rate regime, I have to willy-nilly actually close this account and go shopping for a new loan so that I can also be treated as a new borrower.
So Vivek, I won't say it's unfair. I think ultimately, I think like every institution, the way bank does it is that, proactively to attract new consumers, they try their best. But like I said, there's still a provision where if you are an existing customer, you can go to the bank and you can demand the same rate. And there a typical negotiation happens between a customer and the institution. And in many cases, the bank does cut rates for the existing customer as well. And like I said, if that doesn't happen, in that case, there are options in the market. And again, the RBI has given this mandate to all the banks that if a customer is closing a loan which is on a floating rate, you cannot charge a foreclosure fee. So in that case, this puts pressure back on the bank to negotiate and many times succumb to what consumer is demanding as well.
All right, Abhishek, I have a few more questions for you, but before that, let's go across to one of our viewers who has called in to ask a question. Tapash is now joining us. Hi, Tapash.
Hi, sir. My question is that I have taken a loan of 50 lakhs in 2010 for 20 years. My bank has recently cut home loan rates. Should I opt for lower EMI or shorten the loan tenure instead?
All right, Abhishek, this would be the other point, isn't it? That if your rates are coming down and there is a general feeling that over the next months and perhaps the next couple of years at least we will be in a lower rate regime. So if that be true and if that plays out, of course none of this can be predicted, but that's, as I said, the belief. What should a consumer be doing? Should you be looking for a lower EMI on your loan, or should you be looking at the tenure of your loan?
So essentially, Vivek, in this case, I think there are two parts. One, in the existing customer, like in case of Tapash, where he's already running a loan, and when the interest is coming down, obviously his EMI will come down, and then obviously his repayment capacity is going to be up. In this case, what I advise him is in two steps. So if he has taken a loan where the tenure is maybe around 5 years or less, in that case, the kind of interest payment he has done, is significant, but still there is a significant interest payment which is remaining in the next 5 years. So if he has the funds, he should definitely try to do as much repayment as possible. In case you are serving a loan which is, let's say, more than 5-7 years, so in that case I will not recommend for a foreclosure. The reason I'm recommending this, because the way banks structure a loan, that your EMI initially for the first few years constitute mostly of interest. So if you have run a loan for a 5-7 years, you have already done the interest payment while your principals remain the same. Now in the remaining years, if you are paying the principal, right, without an interest, there is no reason to pay it upfront, because then you can space it out and you can use that money for something else. So this for existing customer. For the new customer, I'll advise that, as far as possible, if the funds permit you, definitely go for a lower tenure.
For a loan, say of 50 lakh of the kind that Tapash has and perhaps a lot of our viewers have, what really has been the saving after the recent round of rate cuts?
So essentially, if you're looking for a 50 lakh loan, right, and like I said, the average cut has been around 0.2 to 0.25%. This will also depend on what kind of tenure you're looking for. Typically, the home loan, people start from 10 years till 30 years, and average tenure is around 20 years. In this case, for example, let's say you're saying you are taking a loan of 50 lakhs for a tenure of 20 years, right? Your EMI component will not really vary a lot because it's a 20-year loan. Overall, if you calculate, right, your EMI will actually, the difference will be even less than 1,000. So this 20 basis point is not something which you should actually have a make or break decision for you in case you have identified a home which you really like at your side.
All right, less than 1,000. So that's really not going to make much of a material difference to most people, isn't it?
Absolutely. So like I said, I think there are two parts to that, Vivek. First is that when you take a home loan, basically you take a home loan because you have identified a home, right? So one is that if you identified a home, everything is working around you. It's a huge decision for any Indian consumers at this point of time. I believe that you should not really give a lot of thought about a 20 basis point about that. So that is first. The second, which is equally important, is that the home you have identified, which are the banks who are willing to fund that. Typically, when a bank funds a property, right, they do a legal and technical verification to ensure that the property is right. It is constructed in the right manner with the right technicalities, and it has all the right legal documents with it. So if, let's say, a bank A is funding you while bank B is not funding you, right, if there is a basis of 20 basis point, right, my suggestion is that you should not really think a lot about it, and you should go for bank A in this case.
All right, Abhishek, stay with me. We're going to take a short break here on Money's Best Friend. After the break, we take more of our viewer queries as well. Keep watching Money's Best Friend. All right, time now to take some more questions of our viewers. Joining me first up is Bhaskar. Hi, Bhaskar.
Yeah, hi. How are you?
I'm good. How have you been doing?
Fine.
Were you very excited with the rate cuts by the RBI, but nothing much seems to have happened?
Yeah, actually, I was planning to buy a property, but I think a few banks have not passed on their benefits of rate cuts to the new borrowers.
Right.
And I was planning to buy a property. For example, if let's say, for example, in a 2-3 months, if I buy a property now and ask the banks later to in 2-3 months to bring my rates down with par with the other borrowers, basically.
Right.
Or not?
Okay. And looking to buy a property now in the next 2 to 3 months?
Yeah.
Okay.
And maybe if I buy, and can the rate be brought down on a later stage?
Okay, all right. Abhishek, 2 or 3 questions there coming in from Bhaskar. He's a person who's intending to buy a property and taking a loan. What would your advice be to him?
Right. So before I think I delve into my answer, I'd like to ask Bhaskar 2 more questions. The first question, Bhaskar, is that have you already identified the property right now?
Not exactly. I have some prospects in mind, but I'm not sure right now.
Okay. And tell me why you are saying that you want to go with the banks who have yet not cut the rate, because there are X number of banks who have already cut the rate, but you're saying that there are a few banks who have not cut the rate. Why you are gravitating towards the people who have not yet cut the rate? Why don't you go ahead and take the loan with people who already cut the rate in case you identify the property?
Actually, the thing is, the banks which I'm banking with, some of them have not cut the rate. So I'll prefer taking a loan from banks
Great.
where
Okay, great. So I have the entire context here. So in this case, right, Bhaskar, here is what I says to you. I think identifying a property is a big thing, and once you identify the property, I'll advise you to do 2 things. One is that approach a bank who has already cut the rate and who has the lowest rate in the market right now and who are also reputable enough. Second is figure it out whether that bank is willing to fund your property or not. So even if you are not banking with that bank, it doesn't give you a constraint that you can't take loan with them. You can definitely go ahead and take the loan with them. Maybe the documentation will be a little larger, the process will be a little longer, but that's all right. So you can definitely go ahead and approach that bank and take loan from them. That is point number 1. Point number 2, that let's say that property is not funded by them and it's funded by your existing banker who has not yet passed on the rates. You can anyways go ahead and take the home loan right now, buy your property. What I'll advise you to go for a floating rate instead of a fixed rate, because that allows you in the future that whenever your present bank cuts the rate, you can go ahead and ask them to pass on the same benefits to you as well. Or in the future, again, you can actually transfer this loan to some other bank whose rates are lower than what you have and they are willing to fund this property. So these 2 scenarios, I think if you keep in mind, I think in a nutshell, I'll advise you that go ahead and buy the property right now.
All right, we have an SMS that we've received from Ajit Malhotra. His question is, I am paying an EMI of 9.5% per month. Should I apply for transfer of loan? What all should I consider before transferring the loan? Abhishek, very straightforward question. What would your answer be?
Right. So 9.5% is the lowest rate right now. One of the lowest rate, I'll say. It's very, very difficult to find a rate in the market which is less than 9.5%. So if you are having a 9.5%, I'll say you're in a good position right now. So continue with that. And like I said, if the concept of transfer will not come here. However, like I always said, if you have started a loan recently and if you have ability to prepay a part of your principal, please go ahead and do it right now. Because as you cover 5-7 years, right, what will happen that you will end up paying all the interest, and then if you do the prepayment, it really won't make a lot of difference to you.
Is there a lot of difference, Abhishek, between banks in terms of is there scope for you to constantly go out there and try and look for the best deal? Because these questions almost indicate that you should be constantly looking out to seeing whether you can actually catch a better deal. Traditionally, it was seen as that you took a loan 15, 20, 25 years and you just stayed with that loan. But clearly it seems that it makes sense to constantly look around and see if you can get a better deal.
So at this point of time, the way our economy is moving, the way we are expecting things will move in the future, definitely this is the time where you should be on constant lookout on what are the prevailing rates, what are out in the market. RBI has definitely cut 50 basis points. Different banks are reacting to that in a different manner. Some has acted immediately, some are acting with a delay. We again expect that in the next 6 months or a year, right, some more positive movements will happen. So like I said, I think it depends upon the situation we are into at that point of time. Given today, right, even if you take a loan, you should not sit idle and keep on paying your EMI for the next 20 years. Please be vigilant. Please be aware that there might be significant movement happening every 3 months, every 6 months. be informed, and wherever you see an opportunity where you can avail a better rate than what you are running right now, go ahead, ask your lender to negotiate. If that doesn't happen, definitely look out if there is a possibility for you to move to the other bank where you can avail a lesser rate and a lesser EMI.
All right, Abhishek, thanks very much for joining us here on Money's Best Friend and taking our viewers' queries and sharing your perspective on something which is fairly complex, but you've made it far more easy for us to understand. Thank you. All right, it's time now to wrap up this edition of Money's Best Friend. We do hope that it has given you some more clarity on RBI's rate cut, home loans, and what it all entails for you. If you have any queries related to equity, mutual funds, insurance, real estate, gold, then do write into us at moneysbestfriend@archtak.com. And have a great weekend.